Hello everybody, welcome to another ChartNexus video. This is Traders Club for Singapore stocks. Today is the 12th of May. Alright, so a lot of people are talking about sell in May, go away. Hasn't happened, didn't happen. In fact, it's a very boring May. So if you look at STI itself, I think really nothing much has happened for the past 2 weeks, I think. Yeah, so well, let's just take a look and see whether there are some trading opportunities triggered. Okay, so look at STI. So it's very clear the support is still holding. All right, so the triple support that we had been talking about for I think 2 weeks now, 3 weeks in fact. Yeah, the 20 MA support, gap support, yeah, and the horizontal resistant broken turn support. Okay, so support is holding. What's interesting now is resistance is also holding, right? So yeah, so this is where we are in the zone. Yeah, so market couldn't decide. Yeah, so you're trapped at the 50 MA, you are supported at the 20 MA. So somebody got to give. Yeah, so if you're trading STI, I think wait, right? Let it be clear. Which side win? Yeah, winning meaning breaking out the direction. Okay, so for now, yeah, so this is what it is. Pretty quiet, pretty boring as far as Singapore stocks are concerned. Yeah. Okay, this is the index. So let's take a look at the. Okay, before that, there's also partly a reason why they are stuck here. Yeah, so this is where if you look at the Fibonacci level. Okay, so Fibonacci basically is a based on the sum of the golden numbers, right? Okay, let me just illustrate this. Now the golden numbers, golden ratio, sorry, and this is where you'll be able to see that it's not stuck at the 38.2% Fibo level. Yeah. So what it meant is from the high of STI right, all the way to the correction. Okay, so now there's a rebound. So based on the Fibonacci retracement, we are still stuck at the 38.2%. So basically what I meant is if it's able to go back up all the way to the high, then the retracement is 100% complete. Okay, but as of now, the retracement is stuck at 38.2%. Yeah, that is an additional reason probably why STI is stuck in this range. Yeah. Okay, but yeah, but if you're trading individual stock, then I think you can just focus on that, right? Skip the STI for now if you're not trading the index. Okay, but we can see that's partly the reason why the blue chips are very quiet. Okay, let's look at SGX. Okay, okay, so this is something that we have discussed and followed through for weeks as well. So yeah, it's great that the support held on. There's some dividend. I believe if you have been holding on to this stock, you have the dividend. That's based on the previous trade. Okay, but if not, then you could be in already based on the the recent signal. Yeah, so that's something that we discussed I think the previous week. Right, so there is a MACD green, yeah, followed by market's confirmation. So market has traded higher for SGX. So more upside potential, right, for SGX, right, based on the trend following method. Okay, so there's SGX. So for those who are not in yet, basically you could still take this trade, right, because the entry price is we're still trading near to the entry price of about 984, 985. Yeah. Okay, so that is for SGX. Okay, let me run the screener and let's see what stocks that we can long and we can short. Okay, so it's running for SGX. Okay, and I run at support. So you're looking for stocks to buy. Okay, so this is the ESP master. Right, so just a repeat for those who have subscription to this, right? ESP master, basically you can screen out for buying and shorting stocks. Yeah, those stocks that triggered our signals. Okay, E stands for entry, S stands for stop loss, P stands for profit target. So not only does it screen out those stocks, it highlights the entry, stop loss, and profit target. Okay, so as you can see here, Thai beverage appeared, right, as a stocks that you can long. So if I double click on it, okay, so this is where it is. All right. Okay, so if you look at as a trend following strategy, yeah, is now at the support. You see 20 MA is now above the 50 MA. Okay, and of course there's a stochastic crossover, so that's the reason why it is a buy low CNX up strategy. All right, MACD has no signal yet, but based on stochastic, there is a crossover. Okay, so basically the entry price is 69.5. So you can see the blue line. Yeah, so that is the entry price. So if the more it trades higher, basically it's confirmation. Okay, now the stop loss is 7%. Right, so the downside is based on the ESP master, the first profit target is 3.6%. Yeah, so that's if you're looking at the recent high. So this is where your risk reward will become not as attractive, yeah, as one would like to be. Okay, but the reason it's screened out because it has triggered the CNX up move. Okay, just that the reward is not as attractive. Okay, so this is based on the ESP master for buying for stocks that you can buy. Okay, I'll just jump to stocks that you can short first before I come back to the screening of volume. Yeah, so just take a quick look at shorting. Okay, there will be more opportunities to short. Yeah. Okay, but again, we need to focus on those that has a good risk to reward ratio. Okay, so this is the screening. Let's wait. All right, so you can see the whole list here. Of course, some of the sector index, so we can just leave it first. Okay, so those that the risk and reward are not attractive, I'll leave them out, right, for now. But we can take a look at OCBC. Oh, sorry, OCBC. Yeah. Okay, so this is OCBC. Okay, so you can see it has triggered a CNX down. Yeah, just now remember Thai beverage to go long. We have triggered the CNX up. So now for shorting, OCBC Bank has triggered the CNX down. Yeah, so basically it's a resistance with the indicator showing a bearish crossover or a candlestick pattern. Yeah. Okay, so entry price, as you can see over here, entry 885, stop loss 917, so it's about 3.6%. So your initial profit target is about 4%, so slightly more than 1:1. Okay, but so you can see compared to Thai beverage earlier, right, this has a bigger potential, yeah, to be down to even 12% if the correction comes back all the way back to the low. Yeah, so limited downside 3.6%, but potentially profit is about 12%. Yeah, so you're looking at 3-4 times to as compared to the risk. Okay, but please wait for the confirmation, right? 885. Yeah, that is the confirmation to short. Okay, next one would be ST Engineering. Yeah, so if you look at ST Engineering, a very similar pattern with the OCBC. Yeah, but just that this is another rule that we have. It's called downtrend. So downtrend means it's a downtrend stocks. We are trading at resistance, and there is a signal. All right, so the signal is the MACD signal. Okay, so as you can see, the entry price in blue 331. Okay, cut loss up here 344. So that's about less than 4%. Okay, your profit is about 4.5% for the first profit target, and to the immediate low will be around 11.5%. Yeah, so we are looking at about close to 3, right? 3 to 1, 3:1 risk to reward. Okay, so I think this would be more attractive compared to the others where the risk and reward is not so favorable. Okay, so ST Engineering and OCBC, yeah, for shorting candidates. But please again wait for the confirmation, wait for the E, right, entry price. And if you're in, please pay attention to the S, the stop loss. Yeah, so they will always limit your loss. Your loss will never go out of hand. At most, you have 5%, less than 10% cut loss. All right. Okay, so as I mentioned, not many good opportunities to look at in the ESP master. I think probably the way the market is behaving. Yeah, so as I mentioned, when times are quiet, stocks go into consolidation. So what will give you the like an inkling that the consolidation is about to end? Yeah, so this is where volume comes in. All right, so if your stock is in trending, then there's no point looking at the volume, because the price will pull back and rebound again, pull back, rebound again. The volume is not such a key indicator. But when times like when the market is quiet, going nowhere like now, pay attention to volume, because that will give you a clue, right, whether the market is taking interest in it. Yeah. So for the volume screener, right, we don't use the ESP master, we have it in the XPertTrader. Okay, so those of you who have subscribed to ESP master, basically you have the XPertTrader as well. Yeah, so we can just turn it on, and pre-built will be the volume increase. Yeah, so basically looking out for stocks that the volume has picked up by 30%. All right. Okay, so I'll just run it for based on today. Yeah, so you can see a few stocks, right, that basically the volume has picked up. Yeah, if you look at Riverstone, so I'll minimize this so you can see over here. If you look at Riverstone, yeah, so you can see. Okay, so I'll just remove the indicator so you can see that. I'll just leave the volume on. Yeah. So of course now the volume is high, but the price has shot up. So no point looking at a trade like this now. Okay, but probably when it could have caught your attention would be on this day. Yeah, you notice that yeah, the price is in consolidation. I think there's no doubt about it. Yeah, so it's just stuck between the range. Yeah, and then the volume starts to pick up. So if you look at the last few days, you see the whole week the volume was low, and then suddenly on this day the volume starts to pick up. Yeah, so this is the day whereby most likely, of course, the day before the volume pick up compared to the rest of the days, and on this day, on the 8th of May, the volume picks up. This is where the breakout happens. So we should be looking out for stocks like that. Yeah, so same thing if you see over here, right, where it starts to consolidate and the volume is pretty low, right, and then when the volume pick up, you see on this day, just illustrate with the arrow. Oops. Arrow, yeah. See on this day, right, the volume starts to pick up. Yeah, so that is where it's highlighting that there is some there are more activity than not. Okay, so get ready, and then when it starts to trade higher than the recent high, like, and the volume is high, this is the day where you can take the trade. Right, so of course this has happened. Okay, so this is the clue on this day. So on this day, this is the clue, and on this day, the volume continues to be high, and the price now trade past the recent high. Yeah, so it's more like a breakout trade. Okay, so this strategy, yeah, it's like a breakout trade, but it's not just a random breakout of resistance. You're really looking at some consolidation phases, and then start to pick up in volume, and then look for the confirmation. Okay, so some of them has run, so I'll just pick those that are still valid and which can present entries for you. Okay, let's take a look at AIMS, APAC REIT. Okay, so again, let's clear the indicator. Okay, so this is what you can see over here. Right, you can see that for about 3 weeks now, the price was consolidating, and look at the volume. All right, so the volume didn't show much of extraordinary activity, right, throughout these weeks, in fact almost a month. Yeah, okay, but when this thing happened, look at the volume. So this is the clue. Okay, so this happened yesterday, so this is the clue that something is going to happen, something is happening. All right, best part, high volume, but the price didn't fall. Yeah, so that shows that there's more bullish pressure than bearish. Okay, so I think so what do you do with trades like this? You look out for the high. So do you notice this is the high, about 122. You see this point? Yeah, 121, sorry. Yeah, 121. So basically, 121 becomes the recent high. So you could take a trade at 122 if the volume continues to be high. Okay, so what happened is today, right, zoom in, notice that today the volume is still high, definitely much higher than the past month, right? The volume is high, but it still is not able to go past the 121 yet. Yeah, notice it's still unable to go past the 121 mark tested. Okay, so tomorrow or the next few days, if the price is able to go past or hit 122 with equally considerable volume, and then this will be the breakout, the successful breakout, right? So you may see something like this, and then the volume high. Okay, but if the price starts to fall, okay, without going past 122, then please stay out of the trade. Okay, so that is for AIMS, right? So today the volumes continue to be high, just that the price didn't give us the confirmation, so we need to respect that 121. So let's see 122 high volume, then the trade is on. Right? Of course, a stop loss. Okay, so let's take a look. I'll just erase this. Okay, so assume you take the trade at 122, and the volume is high and you're in. Of course, your stop loss, look at this consolidation zone, right? So you could set it beneath the consolidation zone. Okay, something like that. Okay. All right. So you could enter 122. If you come down to 111, you cut loss. Yeah. So this is where you're looking at a 9% of a cut loss. Yeah, it's definitely not 10% type of cut loss. Okay. So AIMS, APEC, wait for it to break, and volume continues to be high. Right. Okay, the next one that we can still look at is it's not Wilma. Wilma has just happened. All right, so I'll just give you a recap on Wilma in case AIMS, APEC turns out like that. Okay, so what happened is it could be something like this. Right, so you can see same thing. It always in consolidation. Okay, so what will catch your attention? Sorry, what would have caught your attention would be this guy. Can you see the volume? Here, high volume. Yeah, so this becomes your breakout point. All right, so this guy here, because of the high volume day, the rest of the day the volume was just more or less the same, but this day pick up. So somebody is coming in, right, without telling anybody. Okay, but as you can see, the high is 360, right? So it's 360. So we need to clear 360. We need to see at least 361, yeah, 362, and the volume must remain high to take the trade. Okay, so you got to wait, right? So you wait. See, on this day, waited. So like I said, these few days you're not going to take the trade. Okay, not only the price didn't go to 361, the volume didn't pick up. Okay, but as you can see today, right, you finally clear 361 and look at the volume, it's high. So that's the day you could be taking the trade. And of course, your cut loss, set it below, right, the range. Yeah, so you could be in at 361, you can cut loss below the range, again 9%, less than 10%. All right, so AIMS could be the same. AIMS is now trying. If for some reason it drops, just keep looking at it, and if it breaks out again, you could take the trade. Okay, see, like this is right. So this is the day, volume is high. So if it breaks, right? So if it breaks and hit 122, that's great. But if it doesn't, keep watching. Right, like Wilma, just keep watching it. If it drops, no problem, no trade. But if it's able to come up and the volume is high, this is where you could take the trade. All right, so this is how we go for breakout trade. We follow the market. Right, just one more, which is Food Empire. Yeah, so like I said, some of them like Wilma, Riverstone, they have run up already. So the screener basically screen out stocks that have high volume, but if it has already run, there's really no point looking at that. Okay. Okay, let's look at Food Empire. I'll clear the indicator. Okay, so this is Food Empire pretty much. So again, consolidation. So I just, yeah, you don't have to be exact. You just need to be able to see that the price is not able to go past a certain range. Okay, volume definitely start picking up. Okay, but again, volume is a clue, but it's not a confirmation. We still need the price to go above the high. So this is 54 cents. So we need to see what? At least 54 and a half. Yeah, we need to see at least 54 and a half and a good volume. All right, so which means for Food Empire, you see for the past few days, right? It tried again at the 54 cents. Try again at the 54 cents, but today it came down. Volume is still high, but volume, like I said, is a clue, but it's not a confirmation. So the price is the confirmation. We need it to go back to 54 and a half cents, and the volume must still be like this high, right? Like this high. Okay, so these are the trades that you could be watching out for, right? Breakout trades. Okay, just take a look at the stop loss. So your stop loss. Okay, for penny counters, your stop loss is definitely more than 10%. Yeah, but so long as within 15%, less than 20%. Because for penny counter, if it starts to break out and move, your profit could be looking at 60%, 50%. Yeah, because their penny counter, every bit that they move is of a larger percentage. Okay, so usually for penny counter, you could be looking at definitely more than 10%. All right. Okay, so these are the trades. So a quick recap. For breakout trades, you can look at AIMS APAC, and you can look at Food Empire. Just wait for the volume and the breakout confirmation. For shorting, right, you could look at OCBC and ST Engineering, right, based on the ESP master. Okay, so as I mentioned, the market is pretty quiet, and this has been going on for a while already. Yeah, so just stay patient, and whatever trade you take, keep your stop losses, keep it small, so that when the market comes back again, we have the capital to add on, to put in more trade. Alright, so with that, share this with your friends, or give this video a like, then we'll see you again in the next video. Okay, thank you and have a good night.